This wouldn't be a Michael Bordenero video if we didn't start this off with our friends the leaf blower in the background. Not just one, two leaf blowers. We got double the noise pollution today. Perfect. Must be nice having that in this fancy neighborhood. A couple $1 million houses, nothing but leaf blowers and construction everywhere. Now I wanted to touch on something extremely important today, and that is why are home prices going back up? Michael, you've been talking about this housing crash. It's not happening. Now prices are going back up. What is going on? Well, don't panic, first of all, because I'm going to explain to you what is going on, why it's happening, and also what might be coming afterwards. The first thing that you need to understand, in case you don't already know this, is the housing market in general moves in cycles. We can look back in history, which we're going to do in this video, at data that goes as far back as the early 1960s that will show you that real estate is a seasonal business, guys, meaning that this time of year, when you're seeing home prices go back up right now, is the busy, hot spring/summer selling season. And this is when more people are out there buying homes than, say, in December around Christmas time, okay? And this is reflected in the data when you look at historical home prices. Now, the first data set that we're going to look at here is the Case-Shiller Home Price Index on Fred's website. The first thing we're going to look at is what happened before the last housing crash, okay? We saw home prices go up in the spring and either level off or go down in the fall or winter. And this is reflected in pretty much every single year as far back as this goes. And this Case-Shiller Home Price Index goes back to 1987. So this is pretty reliable. You have about 36 years of reliable data here. And there's a couple interesting things that we can learn by looking at this. And when we look at the early side of this data, the swings in the housing market as far as the seasonality goes is way less pronounced than it is today. You still see home prices go up in the spring and summer and dip in the fall and the winter, but you didn't see these massive swings in prices like we're seeing today and like we saw before the last housing crash. Another thing that we can learn from the Case-Shiller Home Price Index here is that home prices can still go up in a recession, and we're going to look at another data set to also prove that again later on in this video. This house is just another flip. They bought it back in 2020 for $850 grand, and now fast forward to today, they have it for sale for $2.25 million, but they have changed the price so many times I can't even mention it here. You guys can see. And finally, they supposedly have a contract on it, and we'll see what it actually sells for. Property tax bill here is about 20 grand a year right now. But then if we stretch out this chart to show how things looked after the last housing crash, fast forwarding up till today, we can see how things have changed dramatically since 1987. This is the period that I believe we're entering right now, is what we saw after the last housing crash. The first thing you see when you look at this is that home prices started falling off a cliff in late 2006, early 2007. And the other thing that we can kind of visualize from this chart, you start seeing the chart look sort of like a staircase that's leading down, okay? And this is the point in time where I think that we're at right now. We're only now just at the top of this chart where home prices are going to start coming down significantly. However, it's going to look a little bit different than last time, because what do you notice? After prices plunged dramatically, even during the housing crash in the spring and summer home buying season, home prices still went up, guys. You can see this in the data here from the years 2009 through about 2012, which were some of the worst years of the housing market. Every single March through June or July, home prices started going back up before sliding even further back down in the fall and the winter. And this is what people need to understand about a housing crash. Just because home prices are going back up right now, which is typical for this to happen even during the last housing crash, does not mean that there isn't going to be a housing crash. What it does mean, and what this shows, is just how seasonal real estate is. That even when things are not good, we can still see home prices go up during this time of year. Well, guess what, guys? It's already June, and usually they start falling after July or so. So there's maybe one more month at best that you might see home prices go back up, and then I believe we're going to see this staircase down over the next few years, with the bumps going back up during the hot home selling season. So maybe over the next 3 or 4 years, you're going to see this staircase down. And we don't know how far down the staircase is going to go, but you can already see that pattern forming when you look at where we're at today. You saw home prices start to come down by last July, quite dramatically actually, and only now they're starting to go back up. And a lot of the real estate experts will call this a recovery, right? But it's not a recovery, it's seasonality, guys. This happens every single year. Even during a housing crash. You have to remember this. This is so crucial right now. Now, if we switch the data that we're looking at here and we take a look at the median sale prices of houses sold in the United States going all the way back to 1963, we're going to see some different things here. The first thing is going back to the recession, guys, because this is something that's on everybody's mind right now. And, you know, some people think that we're in a recession like me. Other people are saying we're going to completely dodge a recession. Doesn't really matter which side of it you're on. But one thing that we can see here, this chart shows 4 recessions between 1963 and the 1980s. And 3 out of those 4 recessions, home prices continued to go up. And that could be an argument that a lot of people are going to make right now, that, oh, just because we're going to enter this recession doesn't mean home prices are going to go down. And that is a fair argument. But some recessions, prices do go down, like in the 2008 recession. And also in the 1970s, home prices went down during that recession. So it is important to understand that this recession is not a guarantee of home prices coming down, because it doesn't mean that every time there's a recession, home prices go down. The reason that we're going to see home prices go down could be partly the recession, but it's more going to be because real estate has become detached from reality right now. We have high inflation right now. We have high interest rates that combined with high home prices that make buying a home unaffordable for like something like 70% of the US population right now. And the remaining 30% who can actually afford things, it's not going to be enough to buy everything, guys. The 30% out there who can afford to buy are not going to buy all the inventory that's going to come up. And we also are at the mercy of the Fed, unfortunately, because a lot of what they do is going to greatly determine, you know, what's going to happen next. They have their meeting next week. Are they going to keep rates the same? Are they going to raise them? We don't know. But one thing we do know is they're not going to lower them. So interest rates are going to remain high for the foreseeable future. And the longer that interest rates do remain high and unaffordability remains high, the more likelihood that home prices have a lot further to fall. And that is the case that I have been making for well over a year now. Well, let's go back to the chart of the median sale price of houses sold, okay? When we go all the way back, when you look at the full picture of this from 1963 all the way through today, 2023, one thing that you can see without any denying it, guys, is that the drop that we saw in home prices from last July until now, right at the very right side of this chart, is the largest drop that we've ever seen in any one real estate season ever before. And it makes sense, right? Because also preceding that was the biggest run-up in home prices that we've ever seen in such a short period of time. So naturally it makes sense that prices came down as fast as they did. And since history likes to repeat itself, I think you're going to see this graph continue to trend in a downward motion. Now, is there going to be a little uptick in between? Yes, it's already happening now, but we're likely at the end of that, okay? As we enter the fall in a couple months from now and the home buying season is over, the layoffs continue to ramp up, more corporate bankruptcies keep getting filed, and interest rates remain high, it's literally the perfect storm for everything to fall apart after this. I think this could easily be the last hurrah of somewhat high home prices of what they are right now, is this run up that we saw during this spring/summer home buying season. And once the fall comes, you're likely to see the same slide that we saw every single year in the past, and like I said, it was never as dramatic as it is now, but now the numbers don't make sense anymore. So the swings that we see in the market are going to be far more drastic than they used to be. And I just really want to make sure that everybody who watches my channel understands what's going on right now, and you understand that this is not a full-blown recovery. At least historically speaking and statistically speaking, it's not. Anything is possible, guys, but the odds of this being a full-blown recovery right now, where this chart is just going to shoot nowhere but up from here, is slim to none, because that is not something that has ever happened in the past. But yet again, we are in unprecedented times where things that have never happened are happening right now. We can easily blame the run-up on COVID, right? And all the money printing that happened during this time frame, and combining that with ultra low interest rates, that's no doubt what got us here. Now that that environment is over, we don't have low interest rates anymore, and we don't have the massive money printing anymore, things are going to reverse, because there's no way that it can be sustained at this level, and that is reflected in the data, guys. It is extremely important to pay attention to what's really going on and not be afraid and feel like, oh my God, I'm never going to be able to afford a house because it's only going to get more expensive from here. It's going to be more expensive temporarily over the next couple of months. But after that, you're likely to see prices come back down once again. And I have said this before, and I will say it again, that the number one reason that prices haven't already completely collapsed is only because inventory is still so low. We need inventory to go up at least 20% to be where it was pre-pandemic. And it's just not happening right now. So if we switch gears here for a minute and we take a look at the Miami housing market, which is arguably still the hottest housing market in the entire country, guys, and things are even slowing down here, and that should give you a hint of what's to come in many other areas, because if things are slowing down here, the hottest market, then it's likely to slow down pretty much everywhere sooner than later. I'm going to put up the April statistics, which is the most recent data that we have from the Miami Association of Realtors, so that way you guys can see where things are headed right now. When we look at the single family home market, we can see that closed sales are down 19.7%, okay? The amount of sales paid in cash is down 20%. However, the median sale price is still up by 6.2% year over year. So no more of those double-digit gains that we saw for the last 3 years, okay? It's starting to slow down, but still nonetheless more expensive than it was a year ago. People are not getting full price anymore. They're getting about 3% less than what they're asking, okay? The time to get a contract has more than doubled from 14 days to 30 days. Same thing with the time to actually sell the property has gone up 20%. Active inventory is up by 28%. And the month supply of inventory is up by 73%. So this is the direction that things are headed right now. And when we look at the condo market, the same thing is basically true. You have closed sales down by 44% year over year. Guys, that is tremendous, especially with the amount of condos here in Miami. This is such a huge portion of real estate agents' revenue. These guys have to be completely hurting right now when it comes to making money. The condos paid in cash is only down slightly by 3.8%. Median sale price, however, though, still up by 6.4% year over year. The dollar volume, meaning the money coming into the market, is down by 48%, guys. That is a huge drop in the amount of money pouring into these condos. And as well, we have the active inventory going up again. It's taking longer to sell the properties. The month supply of inventory going from 2 to 5. That's almost back to a buyer's market. We're 1 month away from it being a balanced buyers/sellers market. And when I put up this chart right here, this goes back pretty much the last 2 years of the amount of closed sales here in Miami. And what do you notice? It's steadily going down, guys, with that seasonal bump. That bump that you see in the middle and towards the end is that spring/summer home buying and selling season. That's even reflected in the amount of closed sales here in Miami. So that just shows you how cyclical real estate is everywhere. And here's a couple of other crazy things I'm going to put up here for you guys. 45% of all the sales in Miami-Dade that are 1 million plus sales that happened since the last housing crash in 2008 took place over the last 3 years. So that just goes to show you how much money has poured into the area over the last 3 years, guys. And that's why things are so unaffordable here. When you have half of all 1 million plus sales taking place in the last 3 years. That is insane. And even still to this day, as a resident, somebody that lives down here, I just can't believe it. You know, I can't believe the amount of extra people that are here. I can't believe the cost of things now. It is just out of this world right now. And here's one last interesting thing about Miami is when we look at this chart, this shows the top 10 countries that are searching to buy real estate in Miami right now. Who do you see at the top of the list, guys? China, okay? And I'm pretty sure that's going to be off this list very soon as the new law goes into effect, where these guys aren't going to be able to buy real estate here anymore. Now, another thing I wanted to address in this video is I saw some people asking from my video the other day if a REIT, the real estate investment trust, is the same thing as the real estate syndicators that are out there losing everyone's money right now. And the quick answer is no, guys, it's not the same thing. They are similar, but it's not the same thing. So that story you heard about these real estate syndicators losing billions of dollars of other people's money, that is not the same as a REIT. In fact, REITs are likely a much safer investment than investing with one of these syndicators, because the REITs are required to follow many different guidelines that are outlined by the SEC. Because they're traded on the stock market many times, there's a lot more regulation than with the syndicators. And here's some of the differences so you can kind of get a feel for how the REITs are different from syndicators. So first of all, the syndicators usually require you to invest a lot more money, and some of them even require you to be an accredited investor, which means you have a certain amount of net worth and you can afford to lose this money. But with REITs, you know, you can buy fractional shares of these things for as low as $1 a lot of times, and it's just like investing in any other company or shares on the stock market. But they do operate similarly, and they have large portfolios of investment real estate, and depending on the REIT, they have different types of real estate. You have commercial REITs, you have multifamily REITs, you have residential REITs that just buy single families. There's all different types of REITs. Whereas when you invest with a syndicator, you're basically becoming a silent partner and becoming part owner of an LLC that the syndicator forms. So let's say this guy that we talked about, Gajavelli with Apple's Way, he starts an LLC and he has 100 investors, okay? And then he uses the money from that LLC to go out and buy a couple multifamily properties. So these investors are much more exposed to specific risks, in the sense that maybe that LLC owns 10 or 20 or 30 different properties versus REITs, which can own hundreds or even thousands of properties, which does a better job at spreading the risk. So usually a lot of these REITs, they'll own a lot of different properties. You know, you might have one that owns an apartment complex, a mall, a condo complex, you know, different things, and be more diversified in their portfolio. Whereas the syndicator will likely own just a handful of different properties that you're invested in, and your investment is much larger most of the time, because they require it. And I think one of the biggest reasons that people decide to invest with these syndicators is because they don't have the time or don't want to spend the effort finding their own investment properties. And you can still get a lot of the same tax benefits when you invest with a syndicator, just like you would if you were to buy the real estate individually. Versus if you invest in REITs, you don't get any of the tax benefits that come along with owning real estate. So that's why you saw the story where these investors are losing 50 grand, 75 grand, a couple $1 million, because when they invest that money with the syndicator, they have to invest those large sums of money into the deals, because they're basically a part owner of the LLC that's buying these properties. Versus the REITs, it's just like buying shares in Apple, you know, no different than that. You can buy them, sell them anytime you want, and you know, own as much or as little of it as you want. In a way, REITs are the safer investment, but use your own judgment on that. This is definitely not financial advice. This is just speaking from the point of view of spreading your risk. It's a safer investment. Say, for example, you know a real estate syndicator, somebody that you trust and has been doing this for many years, and they know how to buy investment property, then maybe it makes sense to invest with them, because you know they're going to buy good properties and their goal is to actually turn a profit rather than just rob you. A couple of really important distinctions wanted to make in this video today. This weekend you really understand why the housing market is going back up right now. If you guys enjoyed this video, make sure you click the bell notification down below. YouTube will alert you every time I post a new video. And if you don't want to wait, check out my next one on the screen right over here, and I'll see you in the next one.